sessions on a Sunday afternoon to talk about tax planning. Then I realized it's more just an opportunity to meet and greet and see human faces and know that we're all okay. So these are very difficult times, I know, and I really appreciate each one of you who've joined here to just give that energy out here. So welcome to the 10 Crore League's monthly meeting, May 2021. And today's session is going to be on understanding taxes and some family matters. So I thought it was very important to touch upon this subject in the current circumstances because of what we have been seeing around us. And we'll do that little bit of touching. Before we start, there are some new people in the meeting today, as I can see, not the regulars. So I'll start with introducing the 10 Crore League. The 10 Crore League is a community of like-minded people with a common objective of building that kind of wealth so that we can be a blessing to our family, to our society, and to our country. And we believe that 10 crores is a wealth that anybody can build if only you follow the process. What's needed is faith in the process and the discipline to follow it step by step. So the 9 foolproof steps, because we think this is something that's very logical. It's a proven step. It's been practiced worldwide, and go through this in a methodical manner. 10 crores is something that anybody can achieve. So just very quickly to take you through this. This is the what of the 10 crore, not the how. So just for you to know, the 9 foolproof steps to 10 crores is first get your 1 lakh in cash for emergency, purchase all your life, health and disability cover, pay off all your loans except the home loan, create a 6-month emergency fund, start investing for your retirement, parallelly build the child education fund. And after the child education fund is done, attack the home loan and pay it off in full. Focus on the 10 crore target because by then your loans are over, children are taken care of, you have a lot of money, and then you get that benefit of snowballing. And you can focus all your efforts on creating 10 crores. And that's the fastest way to get to the 10 crore target, guys. And last but not the least, which is the purpose of all of this, is to create a very robust, sound giving plan. Now more so than ever before, the giving plan is coming in picture. So we were just doing our monthly budget, and almost every part of my monthly budget has been within budget, especially the fuel and the hobbies and the eat outs, and those things have been well within budget. But there's been one item that has gone outside of budget, which is the giving budget, which I have no regrets about. So we'll talk more about it. And this is for those people who are new, an introduction. Those of you who've been around, you already know this. And there are some principles we live by in the 10 Crore League. We are like-minded people, so obviously we have to have some principles that we live by. So principle number 1 is that we spend very intentionally. We don't throw money around. We have a lot of respect for the money that's been bestowed on us. So we spend very intentionally. And in our family, we work as a team. Pushing opposite directions doesn't work towards getting to this big goal. And we save like a pessimist and invest like an optimist. We have long-term vision for our wealth and our goals. Then we keep our priorities and reach our goals. We eat healthy, exercise, and take adequate rest. Very important, because we don't want all the wealth that we built to go to the hospitals. And we take responsibility for our decisions and our destiny. Even though we may have financial advisors, we may have the 10 Crore League, whatever decisions we take responsibility for them. Our children are very responsible with money. This is something that we very in the core of us, we believe, because 10 crores is a lot of money, and if we're going to be with it, they better be responsible for money so that they can become even bigger givers than we ourselves are. We are filled with gratitude for whatever we have now more than ever. I feel very, very blessed to be here talking to all of you, and I give generously without any expectations. So these are some principles that we live by. What goes by comes around, and if you want your money destiny to change, you have to change. So these are some principles that we live by in the 10 Crore League. Okay, so this is my little monologue that I do in every session. So how about I learn a little bit of what are things happening with you guys now? Why don't you just share with me on the chat box so that we can all see what is the best thing that's happening in your life right now? Give me some dope. I want to hear some nice things that are happening in your life. There's enough news about what's not happening well. Somebody had shared a very, very interesting forward this morning. I think Rajesh Varkande, he had shared about that Apollo launch in the WhatsApp group. He said, yeah, the oxygen cylinders have gone, but tell me what's working there. right? What's working there? So what's the best thing happening in your life right now? Put it on the chat, guys. Let's spread some positive energy. I know these are not the best of times as we see outside, but we got to put our head down there, keep doing our job well, stay alert, and do whatever little we can. What is the best thing that's happening in your life now? We focused on our health, amazing. Focus on health. We're doing our bit in spreading the cheer. Yes, please. Investments are doing good. Savings are maintained. Great, yeah, Harsha. I know. I know what that means. Almost everybody. So somebody had also shared it, right? Your investment, the savings percentages in most families have gone up significantly. Health and diet. People are cooking and eating. Wow, learned a lot of cooking in the last 1 month. Pooja, power to you, man. Super, super duper. Health and
Thank
diet.
you.
Good. Rashmi's got some me time. Good, great. Satish moved into a new house. Congratulations. Very good, yeah. That's a great milestone. Pay off the loans very, very fast now. If you bought that cash down, put it on the chat. Great. Learning for better future. Amazing. Sai Ganesh, knowing yourself. I thought you were very sorted. Great. Okay. So there's something more that you're knowing about yourself, saving, investments, health, profession. That's good. We're so thankful for all of life's blessing, aren't we all? Having dinners together in the family. Yes, we are having dinners together. Wishing all happy laughter day. Yes, today is laughter day. I heard about that too. I reduced my liability down to 10%, just few more months to close it completely. Come on. Power to you, man. Rajesh, pay off all your loans. No, we don't do loans here. Yes. Happy Laughter Day, connecting daily with family members, bought a new car without a loan. Amrita, good, great job. And we can upgrade our knowledge and spend quality time with the family. Tara, amazing, man. You guys are so awesome. And it's so nice to see all of this. You know, you have no clue. You have no clue. And I mean, we're all on the same boat right now, but just saying, just hearing all of this is so nice. Okay, very quickly, how are you spending your time in this lockdown? What are you watching? What are you reading? Quickly, tell me a little more about what are you watching? What are you doing? How are you contributing? Binge watching billions. Okay, okay. Planning to see the Apollo 13 movie today. Come on, Mukul. Yes, inspired by the forward today morning, right? After the session. Yes. Great. I want to watch some movies too. What are you doing these days? Mukul has been doing some really good work on contributing to help in these times. Great job, Mukul. I really appreciate the effort that you've made. In fact, I was about to put that message out to the 10 crore league asking for help. When one of our colleagues in the financial planning industry reached out saying that she's raising some funds for one of her son's friend who's not doing financially very well and needs some money to put the father through a hospital, and she was asking if we can put it on the 10 crore league and see if we can raise some funds. But before I could do it, Mukul did it. Good job. Okay. My Octopus Teacher, don't miss it. That was amazing. Reading more books with wealth creation. Great. I'm reading this book called The Art of the Start by Guy Kawasaki. Yes. My Octopus Teacher is indeed an amazing movie. Good. Knowledge regarding stock markets using LinkedIn. Good. Great, good. And we've had some really interesting stories on sharing and contribution in these times. Mukul, I told you, I heard about what Subodh has been doing. Subodh has been volunteering to handle the government helpline number, which has been, I'm sure, ringing incessantly in these days. So he's been offering his time and efforts in answering those calls and giving information to people. And, I can't tell you how useful that can be, just that information where there is a bed, where there is, where can we get an ICU bed. So, I mean, I'm sure what you're doing out there is amazing. In whatever little way possible, I'm sure you're all doing your little bit, right? And yes, there you are. Thank you so much
Thank
for
you.
all that you're doing.
Thank you. Thank you.
Thank you really so much for all of us. These are difficult times, and it's great to see as givers, we have it in our heart to give with time, effort, and resources. So that's great. Rajesh, today watching election results live. Ah, really? Otherwise, spending quality time with my daughter, rejuvenating myself with good break, a long pending me time, learning more about cryptos from this group and other sources as well. Today's session, by the way, was scheduled to be on cryptos, and I purposely pushed it out for another time because you're going to love the person who's going to come on the show. And I thought we'll have to do a little more drama around it. Maybe let's go for it another time when things are better, right? Of course, today we are going to talk a lot about taxes. Okay, guys, we've done about 7 sessions now. We did budgeting, we did loans, we did risk management, we did investing frameworks, and then we did an asset allocation game with Kanak. We did vision boarding exercise with Zenobia. Then last month we did a very interesting equity investing session with Amit Trivedi. So we've come some distance with most of this. And it was Senthil's idea that we should do income taxes also. It was in fact scheduled for March, but March was way too close with year end. I thought we'd do it in April or May, because right now, if you are looking at tax planning for the year, you're looking at options, instead of keeping it for the last minute, we don't do this last minute thing. We do it well ahead of time. We plan well. So income tax is something that is a little black box for most people, don't understand. So here, this is a disclaimer, guys. This is not a tax advice. Please consult your financial advisor. In fact, nothing that you hear on the group is any financial advice. Don't make your decision based on what you hear here. It's only for you to expose your mind. When it comes to decision making, please consider options from people who know the subject, who are professionals, who are financial advisors, who are tax consultants, before making decisions. This is only for you to have a very intelligent conversation with your financial advisor or tax advisor, right? So that you don't get carried away. You get it? So please understand, this is not a dispensing of financial advice or tax advice. This is just a 101, a very quick one. And this is a long presentation, but I'll try and rush through it. And by the way, I don't really know whether all of this is necessary for you to know or not necessary, but I'm just going with the flow. If you think I'm saying too many things or it's becoming irrelevant, please feel free to stop and say, Bhuvna, maybe we can skip this. Okay, I put together something that's very exhaustive. Is that all right? Is that all right, guys? Tax planning or understanding taxes, not even doing tax planning, just doing understanding taxes. Yeah, okay. Great. Okay, taxes. Good. Great. Okay. So how much tax will you pay? So just to give you a very quick one, we did these videos. These videos are all available on our 10 Crore League page on the Facebook, on LinkedIn. So if you want to refer to this, you can go back and refer to it. Of course, we're recording this session as well. We're recording this session, Kajal?
Yes, yeah.
Okay. Yeah, okay. So these sessions are available, and so we quickly go through this on how much tax do we pay, right? Okay. So let me run this through. How much tax do you think you pay? How much tax do you think you pay? 30%, 20%, 25%? Anybody? Any idea? How much tax do you think you pay? A lot? Just give me some number. How much tax do you think? 10 lakhs, 20 lakhs. I cry whenever I pay tax. Especially when I didn't get the vaccine. I paid tax, I didn't get vaccine. 30%, yeah. 30%, I end up paying 27% of my income. Cool, that's it, man. You say 27. I was expecting you to say 27.27% of my income. So that 50%, come on, Gupta, 50% who pays tax? Yeah. Which country do you live in? 50% direct and indirect taxes? Okay. Okay, so you're talking about GST and this. Okay, put together. Okay, great. Okay, good. Okay. Okay. Good. That's a very good point. Okay, now here we're not talking about okay, Shubdip says he pays 3 lakhs, all taxes together, 50%. Okay, 50%. Okay. So that's a little bit of a digression. 30%, 33% on income tax, and another 18% at the highest level on your GST. That's how much tax you pay. That's if you spend the money, right? If you earn the money and put it in the bank and just save the money, you don't have to pay GST. By the way, just telling you, you don't have to pay GST. That's one tax saving measure also. Don't spend. Okay, notwithstanding, you can ignore me when I say such stupid things, but for now, let me take you through this. Most of us know this, and we follow a progressive tax model in India, right? We follow a progressive tax model. As your income increases, your tax slabs increase. So there is an old tax regime and the new tax regime. Have you all made up your mind on the old tax regime and the new tax regime? Have you all made up your mind? Especially those people in the salaried sector. Those of you in business, I don't think there's much of confusion there. You've all made up your mind on the old tax regime, new tax regime. Okay, great. Okay. If there's anyone who's not made up your mind, I can share a little quick calculator for you. I'll put it on the group and you can refer to that. Right. So this is what it is. You don't pay taxes up to 2.5 lakhs of your income. And after that, you start paying taxes at the rate of 5%, 20%, 30%, so on and so forth. And in the old tax regime, if your incomes are more than 15 lakhs, you pay 30% taxes. Sorry, 12.5, 10 lakhs, you pay 30% taxes. And in the new tax regime, if your income is more than 15 lakhs, you pay 30% taxes. So this is a simple calculator. I don't have to explain this to you. But what I want you to just understand is that it's not 30% directly. There is a slab system. You pay less tax for the early money and then more tax for the rest of the money. Okay, so a difference between the old and the new tax regime. The old tax regime, you could use all the exemptions that were available. There were about 40 odd exemptions available under Section 80C, D, G, A, O, 54, this one, that one. There's 1 million exemptions that are available. You could use all of them. And you pay a higher amount of tax for the lesser amount. For example, your 30% tax bracket starts at 10 lakhs. Right? In the new tax regime, you don't use any of the exemptions available, but you straight away the 30% tax starts after 15 lakhs. So you pay a slightly lesser tax amount. The idea was to put more money in the hands of people who are starting to earn now. Good, bad, ugly, and not getting to a moral conversation, but it is what it is. Tax laws are not debated, you just follow. So more details are available, old tax, new tax regime. So if you give up 40 exemptions, you can choose for the new tax regime. But if you already have a lot of exemptions that you're claiming, you have a home loan, you're claiming under Section 24, you have ATC, ATD, you have children whose fees you're paying. If you're claiming all of those things already, the old tax regime is usually better. Nishchal says new tax regime, very good for him. That's amazing. I'll give you with some examples. So if your income is about 20 lakhs in the old tax regime, you'll pay about 4,12,500. And in the new tax regime, you'll pay about 3,42,000. In the old tax regime, we've assumed that you've not used any exemptions, right? And 4% education test, cess and the total tax liability. Now you can see the difference, right? Espraha, you can see this difference. In the old tax regime, you pay a little more tax if you're not using all the exemptions, but if you can use all the exemptions, it can come to even lesser than the new tax regime. So the effective tax rate, if your income is 20 lakhs, is about 17.8% to 21.45%. So Prabhakar, that's interesting. I share that little Excel sheet with you on the group, and you guys can go and play around and see at what exact level does it change, or when does new tax regime become more interesting than new tax regime and all of that, right? Yes. So this is just to help understand effective tax rate is anywhere at, so like how Bukul was saying, 27% is the tax that he pays. So if your income is 20 lakhs, this is your effective tax rate, more or less. However, when your income goes to 60 lakhs, so then you see your tax liability or your effective tax rate goes from 26% to 28%. So that's the bracket in which Mukul is falling. Now I found you, right? The tax liability is anywhere between 16.12 to 15.42. So you understand that the difference remains the same, right? So you see about 75,000 rupees is what you save between here and there, and the difference remains the same, but your effective tax rate is increases as your income increases. Your effective tax rate increases as your income increases. This is for us to very simple understanding. When your income increases, your taxes will increase. Don't cry. It's okay. Okay. When you earn income, you pay tax. You pay 25, 30, 40% taxes, 33% taxes, but the rest of the 67% is you get to keep yourself. So be very thankful for what we have. Okay. But please do save taxes wherever possible. Tax is not a four-letter word. It is the price we pay for the country we want. So said somebody in America, but I don't know, there's another country that I want, but I still pay the price, notwithstanding. Okay. So does this make sense for you to understand just the basics of how much tax you will pay? Anywhere between, uh, 5% to going up to 28, 29%, 30, 33%. If your income is beyond 1 crore, you pay surcharges. So that's the maximum. Almost 34% is the maximum income tax that you pay. And if you're not spending money, no GST. So that's where it is. Tax is, it's not a four. Yeah, of course, it's not a 4-letter word. It is a 3-letter word. Yeah, it's not. But many people use the 4-letter word when it comes to taxes. Right? Okay, different income sources, different tax rules. Right? Did you realize that there are different income sources that you can have? You don't have to have only one income source. Do you know what are multiple income sources that you can have? We all talk about passive income generation, right? What are multiple income sources? So diversifying your income sources, not only depending on one salary to earn income. Okay, my salary, my husband's salary, my father's salary, not that way. Multiple income sources coming from different sources. Yes, dividend, interest, equity gains, correct? Good. Salary, house property, come on, Sendil. Yes. Yes. You should be doing this session. Okay, so there are primarily 4-5 different sources of income. Income from agriculture is one head. For income tax purposes, let's just understand. Income from agriculture is one head. Income from salary is another head. Income from business or profession is the third head. Income from house property is the fourth head, correct? Then what's the last one? Okay, 2 more. Income from sale of capital assets. Capital gains is one more head, and other sources, right? Other sources. Okay, going through one more time. Income from agriculture is one head. Income from salary is another one. Income from business or profession is the third. House property, capital assets, and income from other sources. So these different income sources are taxed differently. They're not all taxed in the same manner. This is the thing that for you to understand. Okay, so we just go through this very basics, guys. This much tax knowledge everybody should have. That's why I thought I'd go out and give you this basic knowledge. Okay, so income from agriculture is exempt from income tax today. Doesn't matter if you're earning crores and crores of agriculture income, it's exempt from income tax. Agricultural income is exempt from income tax. Number 2, how is salary income tax? Salary income tax is, of course, taxed as per the slabs mentioned earlier. You remember the slabs mentioned earlier, right? 5%, 10%, 15%, 20%. So the same slabs, whether you choose the old tax regime or the new tax regime, as per that slab, your salary income is taxed. You can't incur a loss under this head. Right? There are some exemptions. There is some basic exemption. You can choose professional tax comes, you can be deducted. There are some deductions that you can claim, but there is no loss on salary. Right? So this is something for you to understand. You'll know why I'm talking about losses in just a little while, because business income, you can incur losses, right? As per slabs mentioned is what you will pay tax on the business income also, but the expenses incurred to run the business can be adjusted. Right? For example, if I'm not earning a salary and I'm running a business, and the expenses, advertising expenses or salary expenses can be considered as, it can be set off against the revenues that I make, and I can, if I don't manage very well, incur losses. So the losses can be set off against other income except salary income. So if I make, okay, in agriculture income, of course, doesn't have any tax, but if I'm making an income from any other sources, let's say other incomes or rental property or any other income that I'm making sources, I can set off this loss against those other income. House property is another head. So this is also taxed as per the slab mentioned. And expenses incurred for maintenance, taxes, interest on loan, etc. can be adjusted. And the loss can be set off against any other income. Now here, how can you incur a loss on house property? Any idea? How can you incur a loss on house property income? Any idea how you can incur a loss on house property income?
Interest.
Interest, yes. If you're taking a lot of loan and paying a lot of interest and you're earning peanuts in rent, which is what happens in India, it's a loss on your house property. So we come back, keep saying that the rental income is a bad asset to make. Yearly maintenance, interest on housing loan. Yes. If property is self-occupied. Yes. So if property is self-occupied, you don't make any income. So the interest that you pay is considered, it's not a loss. Yeah. Okay. So it's an expenditure, but you can set off that loss under the head income from house property against any other income. So far, so clear? Okay. Then is the capital gains. The capital gains are all that we talk about: property, wealth, equities, debt, mutual funds, all of that assets. When we buy and we sell, if we make a gain, it is taxed. And they're not taxed at this slab rate, they're taxed at a very special tax rate. This is something that most people get confused about. So we'll just spend a few minutes on understanding this. Equity in India, you get taxed at 15% if the gains are realized within 1 year, and 10% if the gains are realized after 1 year. And here again, you have a 1 lakh benefit. So, any capital gains more than 1 lakh gets taxed at 10% if the gains are realized after a period of 1 year. So capital assets, you can have capital assets in terms of properties, jewelry, patents, shares, whatever, machinery, all those pictures that you see here, all of them are called capital assets. And some capital assets have a holding period of 1 year for becoming short term or long term. And some capital assets have a holding period of 3 years to be classified short term or long term, right? And for equity is one asset class which becomes a long term capital asset if you hold it for more than 1 year. Remains a short-term capital asset, short-term capital gain if held for less than 1 year, and for more than 1 year, it becomes a long-term capital gain. Meaning to say, if on April 1st, 2020, you have bought a share and you're selling the same thing after April 1st of 2021, let's say you're selling today on 1st of May, today markets are closed, but Monday you're selling your shares after 1 year, whatever gains you make, which I'm assuming will be a handsome gain, will be called as long-term capital gain, which will be taxed at 10%. Okay. So if you're making more than 1 lakh tax, so if you bought for 9 lakhs and you're spending, say if you're bought at 10 lakhs and selling at 15 lakhs or 18 lakhs, you pay tax on 7 lakhs, which is 8 lakhs of gains, 1 lakh of exempt, 7 lakhs, you pay 10%, 70,000 is what you pay. So this is on the special tax rate for India equity-based assets if you're holding for a longer period of time. If you're holding for less than 1 year, you pay 15% tax. If you have a non-equity based asset, a non-equity based asset, it goes as per slab rate if realized within 3 years. So within 3 years, non-equity based assets, it goes as per the slab rate. And if it's more than 3 years, 20% is adjusted for indexation. 20% is the tax you pay after you adjust the cost of purchase to inflation. Okay, so let me explain this very, very simply. If I bought an asset in 2010 for, let's say, 1 lakh rupees, this is a non-equity asset. Let's say I bought a debt instrument or I bought something like a piece of land. I spent 1 lakh rupees, and in 2021, I'm selling that 1 lakh rupee worth of asset for, let's say, 5 lakh rupees. Ideally, 4 lakhs is my gain. I should pay 20% tax on it, right? 1 lakhs become 5 lakhs, 4 lakhs is my gain. I should pay tax on it. No. Now, this 1 lakh, had I spent on the same asset today, what would be the cost of that 1 lakh asset? So I adjust that 1 lakh to inflation. Let's say the same asset, adjusting for inflation, 1 lakh rupees would have become 2 lakh rupees. And now I'm selling it for 5 lakh rupees. I pay tax on 5 lakhs minus 2 lakhs, 3 lakhs at 20% tax rate. So this is for some assets where you have to pay a 20% tax after adjusting for indexation. Yes. Prabhakar is saying up to 1 lakh per year, Ltcg is in equity is tax free. That's right. How are losses managed? We'll share in the next slide. There's also grandfathering clause for equity MFs. Yes, that's 2018 ke pehle ka story hai. If you had assets from back then before 2018, there is some grandfathering clause. I'm not going to get into those details here. Largely understand this. This is to help you have an intelligent conversation with your chartered accountant. Don't make tax decisions based on this. Okay. So, of course, grandfathering clause applies for equity mutual funds. Yes. For property holding period will be 24 months for long term. Is that true? Is that true? 24 months or 36 months? Really? Okay. Great. Okay. That's a that's a piece of information I'm surprised about. Sorry about it. Okay, 24 months for properties. Okay, so if Rashmi is saying it and Nishchal is saying it, and all of them are saying it, that must be right. So the property becomes a long-term asset after 24 months. A debt instrument or a bond becomes a long-term asset after 36 months. Okay, so this is okay. It's recently modified. Okay, sorry. Okay, I've not stayed abreast. Sorry. Yearly maintenance mentioned above. For the property, are you talking about property? Okay, so the house property you can claim up to 30% of your income as maintenance expense, not the exact amount. You can straight away go and claim 30%. So if you're earning, let's say, 3 lakh rupees rental, then you can claim up to 30% as maintenance and then pay taxes on the rest of the money. So there is a provision for allowing, there's an allowance for maintenance of the property that's provided in the income tax law. 30%, that's right. Yeah, Devant says 30%. Okay, so Praneeth was asking a question on what if losses happen, right? If there are losses on your capital assets, then you can set it off. You can set it off against gains in the same capital asset category. Okay, so capital gains losses can be set off against capital gains that you've made. Okay, here again there is the condition that short-term capital loss can be set off against short-term and long-term capital gains, whereas long-term capital loss can be set off only against long-term capital gains, and losses can be carried forward and set off against gains over the next 8 years. Okay, I'm giving you very basics, guys. There are a lot more nuances to this particular set off, which I would like for you to please go and refer to your chart accountant with your specific case. Just understand, short-term capital loss can be set off against short-term capital gain and long-term capital gain. Long-term capital loss can be set off against long-term capital gains. And if you have a loss, let's say this year I've suffered a loss, but I had no gain to set it off against. What shall I do? I can carry it forward to next year and set it off against gains of the next year. Like for example, in 2020, March, there was a few people who panicked and sold their assets at a loss. They had no gains to set it off against. They carried forward that whole thing. And if they had made profits in the next year, they can set off the loss of the previous year to the gain of the next year. People usually set off their losses of the equities to gains that they make from property. So that's something that you can do. So these are all tax planning ideas that usually chartered accountants come with, your tax consultants come with. So this is a provision in the act which you can apply in your personal circumstances depending on its suitability. Is that clear? Yeah. So far so good. Is it like little more, little intense? Are you guys okay? See, there are a lot of professionals here who are tax experts themselves. Okay, probably very fun, very preliminary for them. But for the others, it could be useful for you to broadly understand. Just a quick refresher on most of these topics. Okay. So we've already spoken about agricultural income. How is it taxed? No tax. We've already studied salary income. How is it taxed? As per the slabs. That's the understanding. Pranit, I'll answer your question. Why? How is the third head, which is income from business or profession taxed? Income from business or profession. If you have losses, if you have expenses, you can set it off against the gain and you can pay tax on the rest of it, right? So, and taxed as per your tax slab. The fourth head has been capital gains. We saw how capital gains are taxed. India equities is one segment, property is another segment, and anything that's non-equity, non-property is another segment, and they're taxed in different manners. Property, of course, become long-term after 2 years, and other assets become long-term after 3 years. So there are short-term assets, long-term assets, short-term gain, long-term gain. Something can be set off, something cannot be set off. There is some rules around them, right? Is there any additional tax when capital gains tax is added on top of salary and the whole thing crosses 50 lakhs? Yeah, the whole thing crosses 50 lakhs, then the surcharge and whatever applies. Correct me if I'm wrong on this. Those tax experts who are there. You have the answer for this, please help me with that answer. I think the whole thing is taxed as the surcharges apply. The surcharge applies on the whole of the income. How are other income taxed? As per the tax slab, as per the slab rate. So you can't incur a loss under this head. So you can't set it off against anything. Right? Capital gain on gold. How many people are selling gold and getting white money? Tell me that. No, notwithstanding, gold is also a capital asset, 3 years for long-term capital and taxed at 30%. Yes, yes. Slab rate, business profession set off on gains, pay as per tax slab, equity and non-equity separate tax slabs. Very good. Come on, we have a quick summary there. Great job, Vivek. Thank you very much. Gold is a capital asset, taxed just like any other non-equity, non-property capital asset. That clear? Okay. Money is money from wherever it comes, but not for the taxman. Right? So this is something on different sources, different so incomes, and the way we tax them is different. Right? This clear so far? So far, so good? You're understanding just the basics. Important tax saving options. Interested in knowing what are important tax saving options? Bring it on. Great. Okay. I sometimes keep wondering, what is this bio? Bring it on. Okay. Important tax saving options. Good. Okay. So the most common tax saving sections are, guys, you're not going to write an exam on tax planning now after you go through this. These are basics, but this is something that you need to understand. In the new regime, these things don't apply, like I told you already. But in the old regime, these things apply for most part of people, most part of the population, unless you're coming into the working sector right now without any baggages, without no insurance policies, without any children, without any home loans or anything, then you choose the new tax regime. You don't have to, you can just log off right now. You don't have to go through any of this understanding tax saving sections and all that stuff. So this is very plain, simple, applicable only in the old tax regime. So for most people, if you use these tax saving options, the old tax regime is still very, very useful. So there are these 80, section 80, which covers ATC, ATCCD, ATD, EG, okay, ABCD, whatever. ATC is to encourage long-term savings habit. ATCCD is to encourage retirement savings habit. ATD is to promote purchasing health insurance. ATE is to encourage spending for higher education. Ketu, can you mute yourself, please? ATE to encourage spending for higher education. Sorry. And ATG is to encourage contribution to social causes. Okay. All that the government usually does in other countries, when we do it ourselves, then we are given a few sops by the government for taking care of ourselves. Right? You're saving for your long term, you're saving retirement, you're saving your own, purchasing your own health insurance, you're spending for your higher education, which usually is free in most other countries, right? What the government does for them. And if we are doing it ourselves, we get some tax benefits. That's all that you've got to understand at this point. So these are some very basic things. What are long-term saving options available to you, for which you can claim a maximum of 1.5 lakhs in taxes. PPF, EPF, life insurance premium, ELSS, principal amount paid towards home loans, stamp duty, registration charges for purchasing a property, Sukanya Samriddhi Yojana if you have girl children, national savings certificates, senior citizen savings schemes, ULIPs, tax saving FDs for 5 years, infrastructure bonds, and tuition fee paid for children. So Jay Kantan is asking, what is the tax rate for gains from international stocks? Okay, simply it's not India equity, so you don't get India equity benefit. It gets taxed like other assets which are non-India equity assets. 3-year long-term capital gains, 20% tax, just like debt instruments. Yes. So these are various tax saving options under Section 80C. This is all long-term savings options. You must have heard of most of them. So I've just put them here for you to understand. The maximum that you can save on all of this head is 1.5 lakhs a year. This is additional 50K available when you do the NPS, so deductions. So additional 50,000 benefit is available over and above the 1.5 lakhs in Section 80C for specific contributions to the National Pension Scheme. So this is something that's very popular amongst most people for the tax saving benefit. NPS being a useful investment or not, notwithstanding, you immediately get a tax saving benefit of whatever is your tax rate for 50,000. Partial withdrawals are not allowed, are allowed subject to certain conditions, and when withdrawing at the age of 60, 60% is tax free and 40% compulsory annuity purchase. Now these laws keep changing. Okay, every 3 months this law keeps changing. So you just look up the latest law on NPS on what is the withdrawing age limit and how much is tax free and 40% is compulsory annuity purchase. This is, as I remember last, I think now they want to withdraw the compulsory annuity purchase requirement also. So that has been in the conversation. But to begin with, this of course happens when you withdraw the money at the age of 60. Right now, you can claim an additional 50,000 tax deduction, which means a tax saving of approximately 15,000 rupees, 15 to 18,000 rupees, right? Depending on your tax bracket. So this is Section 80 CCD. And this is, of course, Section 80D, which is health insurance. So I hope all of you have health insurance for yourself and for your parents. I want to share a very interesting information or news that came about. For a very long time for our in-laws, we did not have enough health insurance. Both of them are over, my father-in-law is over 80, my mother-in-law is over 70, 72, 73, and a few little health issues, but otherwise they're healthy people. We've not had health insurance for them for a fairly long period of time, because at that point in time your entry age was fixed at 60 and you could not take insurances. And this has been an issue always when we were planning our finances also. How much should be set aside for health cover for our parents? My need for emergency is forever expanding. I'm saying, okay, 6 months. Okay, now 6 months is not enough. 6 months plus something for health requirements for parents. So this has been a point of contention in our financial plan. And very recently, I managed to take a top-up health insurance for the parents. Right, we were not getting base health insurance for them. No insurance company. Couple of times they came, they took medicals, then they rejected the policy. They've not issued a base health insurance policy. But what we got is a top-up health insurance for 15 lakhs with a deductible of 5 lakhs. So that was easier for me to get. This is just giving you some information. It was easier for me to get a 15 lakh cover with a base deductible of 5 lakhs. So now I know if I have 5 lakhs in the bank for health insurance, for health needs for the parents, we are fairly safe, because anything over and above 5 lakhs, the insurance policy will cover. So just giving you this information right now, because the policy just got issued. But for the premium that you pay for on all these policies, whether for yourself or for your parents, how much ever you're paying, you get benefit under Section 80D. Right? This is the little chart. You can take note of it. Another thing is, as long, and I've never done this, by the way, my parents age 60 don't have medical insurance. Medical expenses incurred up to 50,000 per year can be claimed under Section 80D, and I didn't know this. Okay, in so many years, they didn't have health insurance. We have been spending on their medicals, medicines, this, that, but we've never claimed this Section 80D up to 50,000, right? So this is an interesting piece of information that you would want to take away, right? Is there specific for an insurance company that was ready to offer? Okay, so Religare did offer this insurance, senior citizen insurance. I can look up the name of the policy and let you know. Okay. So this is something that you might find useful under Section 80D. If your parents don't have insurance, you can claim for their medical expenses under Section 80D. Speak to your child accountant about this. Okay, tell him that I have some bills, I have some medicines. Can you claim this under Section 80D? Okay. Of course, this is a home loan interest. Home loan interest. Oh, sorry. Education loan interest. Education loan interest under section 80E, the interest on the loan taken for higher education for yourself, for spouse, for children, or for any student for whom you are a legal guardian. And from banks, financial institutions, you should have taken them. It can be for any education after senior secondary. It can be India, abroad, undergraduation, post-graduation. After senior secondary examination, if you taking a loan to put your child or your spouse or your adopted child through education, you can claim tax exemption on the interest that you pay. There's no limit to this. All the amount that you pay as education loan interest, you can claim, but the maximum period of repayment should be 8 years. So they themselves are also saying, please repay your loan faster, don't keep it forever. And so the maximum period available for your interest exemption is 8 years. Yeah, yes. Nishchil is saying Max and Care Star. Care Star was the policy that we got. You're right. Rajesh is asking, question to insurance experts, do we have life medical insurance products for parents above 60? I think that's the conversation we were just having. Nishchil is mentioning there is Max and Care Star offers. So Rashmi is also there. I think we have another insurance expert in the group, Deepa. I'm not sure if she's here. Deepa Bide, she is also an insurance expert. So we have a few insurance people in the group. So you could put it up, and if you need their help, please reach out to them. They can help you get the policies as well. Right? So ATE, so you broadly understood, and ATG, because all those contributions that is going now for PM Care or other contributions that you're making for social causes can be claimed under section 80G if you have the receipt. If you're making anonymous contributions, not getting receipt, you cannot. But there is a qualifying limit. Contribution cannot exceed 10% of the gross total income. Primarily, if you say, okay, I earned 10 lakh rupees and I gave away all of that 10 lakh rupees, so I won't pay any tax under section 80G, it doesn't work. Your contribution to and claiming, you can contribute all of your 10 lakh rupees, no problem about that, but you will get 80G exemption only up to 10% of your gross total income. Okay, so good. So contribution to certain donations get 100% deductions and some get 50% deductions without the qualifying limit. So look this up. ATG is also available. So all the contributions that you're making now to support the country recover from COVID, wherever possible, collect the bills and keep them so you can claim section 80G deduction when you file your tax returns end of the year. Right? So don't miss on these. Paying tax is your responsibility, but saving tax is your right. Okay. So don't miss out on this. All these provisions are available. We make use of them very, very smartly. Does this make sense to all of you? Great. Okay, another very important question, not really relevant at this point. When we're doing these videos in March, it made a lot of sense. So do you need to do any additional investment for ATC? You need to do any additional investment for ATC. I know in the month of March, you usually have these banks calling you or the insurance agents turning up to say, tax saving ke liye kar dijiye, please buy this policy for tax saving. You have to do this for tax saving. And then all these ads coming up, get 30% tax benefit, ye, wo, sab kuch. But do you need to do any additional investment for ATC? I see people, I've seen clients come with every year, they've taken new policies to claim tax benefit under section 80C. Okay. So most often than not, you don't need to do any additional investment for ATC at all. So here is a quick checklist. Yes, Amrita says a big no. Yes. So here is a quick checklist. You don't have to invest in anything for tax saving if, okay, do your checklist on this. Your employer deducts EPF from your salary. Is your employer deducting EPF from your salary? Yes, no, okay. You are repaying a home loan. If you have a home loan and you're repaying a home loan, then keep these points in mind. You're paying premiums for life insurance policies that you've already bought last year, previous year. You have to pay for 10 years. You're paying premiums on those policies that you already have. You're paying fees for your children's education in school or college. Apart from this is not section 80E. This is under section 80C. Just the tuition fee that you pay for your children's school fees, you can claim under section 80C. Okay. Today, if you have one child, the average school fee is anywhere between 60,000 to about 1 lakh of rupees. or more, 5 lakh rupees also, 7 lakh rupees also some of our clients pay. That's immaterial. But you can use those bills, those receipts for claiming Section 80C. Now add the above. Your employer is deducting EPF, you're paying a home loan, you have life insurance policies for which you're paying premium, and you're paying for your children's education in school or college. And all of these amounts put together is adding up to more than 1.5 lakhs. On home loan, of course, add only the principal repay. Okay, only the principal that you repaid. If all of this is adding up to more than 1.5 lakhs, there is no more scope for you to save any more tax. Okay, don't buy any of those fancy insurance policies that people come selling to you in the month of March. This much you can be smart, right? So just for you to understand, these are all put together, you can claim only 1.5. You take a health insurance policy and all that you can do. ATD, that doesn't come under 80C. Right? If yes, you don't have to do any tax saving investment. If no, then you call your financial advisor. Is this clear? Is this clear? So far helpful, guys? Is this making sense? Give me a quick feedback. Rajesh says yes. Yes. Okay. So far, so good. Okay. So we covered how much tax you pay, the tax slabs, and then we covered what are various heads under which your income is taxed, various income sources, various tax provisions. We spoke about capital gains, short-term, long-term set-off. Then we spoke about various tax saving options, ATC, D, G, E, F, whatever. And then we spoke about do you have to really do anything about your ATC or not, right? Yes, I'm proud to pay taxes. The only thing is I could be just as proud for half the money. Very, very true. I can be very proud as well for half the money. Okay, quickly, not spending too much time on this. ATC options, a quick comparison. Which of the ATC options should, this is usual one, anything new or extra? Which one? Which one are you asking for? Is this the usual one? Anything new or extra? I didn't quite understand that question. Do you want to unmute yourself and ask me that question? Or do you want to type it out? Okay, I'll wait for that question to come and answer it when it comes. ATC options, okay. ATC options are the same options, same Archama only. It's nothing new. So these are the various ATC options that we have, and you can choose. But see, right now, because you're a little more aware, and in the investing frameworks, we spoke about a few filters that you will use before choosing an investment product. You remember those people who were there at that session, investment framework? What are the 4 filters that you'll use before choosing an investment option? Does anybody remember? 4 filters before choosing any investment option? Quiz time, guys. Let me see how many of you remember. There were 4 filters we spoke about. Before choosing any investment, before signing on that dotted line, you will ask these 4 questions to whoever's selling you that investment option. What were those 4 questions? Liquidity, yes. Returns, risk, liquidity. Come on, Amrita. Amit, triple E, liquidity, returns, liquidity, safety, returns, tax. I didn't attend the session. You didn't attend the session? Okay, lock in period. Okay, good, great. Okay, so Amrita is that star student of the class. So she's given the answers. You should get returns that beat inflation. Risks is something you should understand and you should manage. Liquidity profile should match your requirement in your life, right? And then you should have, what is the tax cost and ease of maintaining those investment options. So these are the 4 questions. Before signing the dotted line to buy any investment product, these are 4 questions that you'll ask whoever is selling you that investment option. Number 1, what is the returns I can expect from this? Tell me in percentage, CAGR, IRR, annual percentage numbers. Don't tell me money will double, triple and all that drama. Tell me how much is the IRR on the product and compare it with your personal inflation and see if you're getting a better return than personal inflation. Point 1. Number 2, What is the risk profile of this investment? Can I lose capital? Can the interest stop coming? Is there a possibility that something can go really wrong? What is the risk profile? I'm not saying I will avoid all the risk, but I want to understand what the risks are and take as much as I can handle, right? So that is number two. Third, what is the lock-in period? What is the liquidity profile? Will I get the money when I need it? Okay, don't tell me this product is stuck for 10 years when my child's education has to be met in 5 years. The liquidity profile of that particular investment should match my personal needs. The third, fourth one, it should be hassle-free for me to buy that product, pay the taxes, the cost, the maintenance. It should be easy for me. Right? So these are the four conditions. So you put all these investment options under these conditions. So what are the returns expected? What is the risk? What is the lock-in period? What is the regular commitment on this? And what is the gain or income taxability on these investments? So we've just put this very quickly. You can use this as a reference point for you. I will make this presentation available for you. It's anyway available in the 10 Crore League Facebook and LinkedIn page. You can access this. So this is very quickly what it is. PPF, NSE, PPF, they are going to reduce the interest rate again. So I don't know, NSE is a little less than that. So here you have all of them in front of you. Now you make a decision which of this is most suitable for you. Tax saving FDs give you 5 to 7%, ULIPs give you 8 to 10%, low risk, equity market risk, okay, both are available. So is this making sense? I put some more for you to see. Sukanya Samriddhi, right? Senior citizen saving schemes, equity linked saving schemes. So some of them have risk, some of them are risk free, some of them have equity market risk, and the locking periods for different options are different. Some have 5 years, 3 years, 15 years, 21 years, right? And the regular commitment on them are different, right? So for some of them, you just buy once and hold. Some you have to buy every year. And yes, so, and also what is the tax on the gains that you make, on the interest that you earn, right? So that is also something that you have to look at. So I'm leaving this to you. Take a screenshot if you want, just for your reference. Not going into the details of this. Making sense? Making sense? Okay, nothing wrong with the younger generation that becoming taxpayers won't cure. I'm very confident about that. Become a taxpayer, everything wrong with you will become right. Come on, guys. This is great. This is amazing. I keep saying that to myself, you know, this is great. This is amazing. But I think this is very useful content for people who are new to the whole tax thing and they get rattled by, oh my God, I have to pay so much tax. And I don't know, is there any way that I can reduce the taxes, right? So to that extent, it's just a basic 101 on tax planning. So I'm going to just introduce some common tax planning tools. Yes. Voluntary PF, 8.5% risk-free return. Okay, is that rate still on voluntary PF or has the rates come down? 8.5%. Any idea? The voluntary PF interest rates, are they as high as 8.5%? I thought they were comparable to PPF, maybe a percentage here or there. Other experts in the group, you want to yeah, it's reduced, right? That's what I hear. Voluntary PF interest rates have reduced. They're not really 8.5%. Every year they are reset. So it's not a fixed rate for throughout the period also. And now they have rules that your PF contribution should not exceed 2.5 lakhs a year. Then the gains can be taxed. So it's a little complicated. Current year, the 8.4%. That's amazing. Good. Great. Thank you. Okay, so but by the way, your voluntary PF and your EPF cannot exceed 2.5 lakhs from the current year onwards. It can exceed 2.5 lakhs, no problem. You will get 8.4%. Just that the interest that you earn will be taxable. You won't get the triple E benefit. So 2.5 lakhs is the limit for PF contribution. I guess 8.4 lakh for benefit. You mean, okay. Okay, Vivek, what are you saying? No. Nishal saying 2.5 lakh for benefit. Yeah, okay. 8.4%. Correct. So 2.5 lakh if you want to get triple E benefit, and the interest rate is 8.4%, right? You can never stop learning about taxes. Huh? Something or the other is coming up all the time. I think I know about 85-90% of whatever tax laws are, but there's something or the other that's new that we've missed. So Vivek, is my understanding right? To clarify to everybody, PF, EPF and VPF put together cannot exceed 2.5 lakhs. Yes, it can exceed 2.5 lakhs, but on the interest earned for contribution over 2.5 lakhs, your interest is taxable and the interest rate is 8.4%. There's no limit, days are over, boss. Sorry. Okay, some few common tax planning tools that many people, when you get to the 10 crore league and all, you have to consider is creating Hindu undivided family. Now I know I'm opening a Pandora's box here and introducing some concepts that are little foreign, but yeah, the Hindu. Let me give you very basics about this. Now the Hindu undivided family becomes an independent entity. So what happens is in the joint family setup, if there are brothers living together, there's a father, there's a matriarch in the patriarch in the family, and then there are 2-3 brothers and their wives and children living as together, and they own common assets, like they have a family house or they have family land or they have a business and they're earning income in that entity. Okay, so you can have a Hindu undivided family as an independent entity, and all the incomes earned by the HUF are taxed as a separate person. Okay. Now these days people don't live in joint families, but still they form Hindu undivided family with just the man, the wife, and the children. There's no joint family and all. So what happens is the income, the tax, post-tax income earned by the karta, the man, is invested into the assets of the Hindu undivided family, and the income earned from it gets taxed as a separate entity. Okay, why this is important to understand is, let's say there's man, wife, children in one family. Man is a tax entity, wife is a tax entity, the HUF is another tax entity. So the man gets basic exemption, wife gets basic exemption, HUF gets more basic exemption, right? So let's say the man earns 20 lakhs a year, and from his income from his investments, if they are made in the HUF's name, then they get taxed separately. But if he's holding it himself, let's say, for example, his income from salary is 20 lakhs and his income from capital gains from assets held by him is 5 lakhs. He pays tax on 25 lakhs, and you know the progressive tax regime that we follow, he pays a much higher tax. Now, this 5 lakhs, if it moves to the HUF, assets are built in the HUF's name, and income earned by the HUF is taxed as a separate entity. Hindu undivided family has another 5 lakh exemption, so you pay no tax on that 5 lakhs. Right? So this is a smart tax saving option that's available. This much I will tell you. So there is somebody called a karta, who's the head of that family, co-partners who come lineage, who are born into the family. Members of the HUF are people who marry into the family. So a co-partner has right to split the HUF or become the karta, while members of the HUF are people who come in, like wives of the karta or the co-partners, come into the family. They don't have rights to split and all, but they can choose to get their share of the income. Creating a HUF is fairly simple. Well, I think Jain Sikhs also have HUF, but I've heard a particular example of a Muslim HUF also. I'm not very sure. Only Hindu male hair. Okay. Hindu Jain Sikhs. Yeah. Sorry. Karta co-partners, members of the HUF, and creating a HUF just requires you to create a HUF deed, get a PAN card, and open a bank account, and then you have a HUF, which you can start operating immediately. It becomes a separate tax entity. This is one very popularly used tax saving tool amongst people with some amount of wealth. So just leaving this thought with you. And a few other tax saving tools are tax loss harvesting. Tax loss harvesting is, let's say you have a laggard in your portfolio, you have an investment that is not doing very well. and you want to exit it at a loss. Instead of just holding it on, in one particular year, if you have made profits in other assets, you just get rid of this loss making investment, set off the loss against this gain. So that's something that you can do, tax loss harvesting. Sometimes people go and buy loss making investments and then sell it off at a loss and then sell it off against gains. There were options called bonus stripping and dividend stripping. Dividend stripping, of course, now makes no sense because dividends themselves are getting taxed. So it's not making any sense anymore. Bonus stripping, of course, the holding period has become more than 1 year. So that also has become a little less relevant. But one interesting tax loss harvesting people that people use is the 1 lakh Ltcg exemption on equities. So let's say you have mutual funds, you invested 10 lakh rupees, and it's growing and growing and growing. Over 10 years, your 10 lakhs becomes 30 lakhs, right? Your 10 lakhs becomes 30 lakhs. At the end of 10 years, when you exit that 30 lakhs, you pay tax on the gains that you made. Like 20 lakhs, you pay 10%, so 2 lakhs of tax you'll pay. That's the normal tax on Ltcg on equities. Now, over the 10 years, every year you could have booked 1 lakh worth of long-term capital gains without paying taxes. So you just use it very smartly to say this year 10 lakhs has become 12 lakhs. I'm just booking that 1 lakh profit and reinvesting that money. And then now my cost of purchase become 11 lakhs. And I go on doing this, so on and so forth. It's very possible that by the end of 10 years, that my cost of purchase itself, because I booked profits and reinvested, my cost of purchase itself has gone up from 10 lakhs to 18 lakhs or 19 lakhs. And my profits are now 30 lakhs is what I'm selling it for. I pay tax only on 12 lakhs and not on 20 lakhs. So that's one method of tax loss harvesting, that is using that 1 lakh Ltcg exemption on equities. So these are some options that are available, little options that are available that you might want to consider. Can you please share the link to assess the presentation? I missed the initial part. Okay, I'll do that, Sandeep. Yes. Right, so these are some tools. I'm just sharing these things with you guys because they're common and you might just want to have a conversation about it. So far, so good. This is what I wanted to share about tax loss. I don't know if I covered a lot, but it's been 1 or 10 minutes already. Okay, we have some more to cover. So far, so good, guys. Was this useful for you? Some 101 on tax planning. Not too much information to confuse you, just the basics, and just for you to have an intelligent conversation with your chartered accountant or your financial planner, so that you can make use of the provisions. You can just go and ask them, you know, what about tax loss harvesting for this year? Can I do it? Can you just book the profits for 1 lakh this year so that I don't end up paying? You just ask those questions, right? So you just, to them also you look smart, right? Okay. So this was one part of the presentation, guys. The other one was something that came from an initiative done by a financial advisor in our community to create, for people who are losing their loved ones due to COVID and who need financial advice, help. Like, how do I access my insurance policy? How do I know what assets are there? How should I get my PPF out? All of those questions that are coming out for the families of people who pass away due to COVID. And this has been an initiative from our fraternity. We have a very thriving, enterprising fraternity, by the way, who comes out there and puts their heart and mind out to help people. And this has been in my mind saying another number that I was looking at just now, you will fall off your chair if I tell you this. Do you have any clue how much money is lying unclaimed with LIC of India? LIC of India has 12,892 crores of money, 12,892 crores of money lying unclaimed. Unclaimed, which means somebody or crores of people have bought insurance policies on their own names, have kicked the bucket, have not told their families about these insurance policies and have kicked the bucket. Right? Just imagine that family. They have, they need the money. There is some insurance lying somewhere, but they don't know about it. They can't go make a claim because they don't know it exists. 12,892 crores of money lying only with LIC of India. I'm not talking other insurances and all. Similarly, there must be money lying in the banks. I heard 2,900 crores or something lying with SBI Bank. Okay, not kick the bucket, fine. So they just forgot about it also, right? I'm just talking extreme cases, maybe 80% of them, whatever, or they've just not paid the premium for the rest of the period. It's just that the premium is lying there. Could be many things. I'm just saying 12,892, you discount some 20-30% for other things also. This is become bigger than the pandemic, which is the pandemic is going to leave us financially very, very unsure, and with the age group of people who are passing away in this pandemic is what is, it's very disturbing. So I thought it was important for us to just stop here and okay, so the numbers could be, I just gave you one example, right? Then you just imagine what it could be otherwise. And the point that I'm only trying to make is how many of your families are aware, in how many families are you making these decisions together? Okay, how many families are financial plans made as a team? While in 10 crore, we talk about in our family, we work as a team. And the reason we say, yes, in EPF also, no idea. Yeah, most families have no idea where their husbands invest. I mean, I'm very sure I work with a lot of women clients. And there are some advisors in our fraternity who work exclusively women clients. Okay, they will vouch for this. And they have no clue. Women are not included in these conversations. Sometimes women don't take interest also. I mean, not blaming men, women, nothing. They also don't take interest. These people also don't include them. So the need for including the family in a financial decision, to keep them informed, to include them in the conversations is something that I wanted to bring about here. So I have just asking you these questions, guys. How many of your family members, or in how many of your families do your spouses, your partners know what assets you own? Does your partner know what all assets you own, what all insurances you have? Do they know? Okay, you don't have to answer that question. You know the answer yourself. Okay, do they know how much you earn? Do they have the contact details of your insurance agent? Do they have the contact details of your financial planner? So this is bare minimum that we can just take this one single word, go out there, tell our families to, include people in their families in this conversation, right? So now there is a lot of hesitation about people. How do I open this conversation? They don't want to talk about it. So I just thought I'll share a few 5 tips that, okay, how can you start including your spouses in this conversation? What can you do? What can you do, right? Even we as financial community not include family in our assets. You don't? Okay, I'm surprised. I don't know how that will work. So if 10 crores is a huge target, guys, 10 crores is it's inspiring, but it's like running a marathon. I've given this example many times. But how will you do it if your family is not with you? Just imagine there is one person who's focused on wealth building, the other one is focused on spending. It's like one gadi trying to run with the 2 wheels running on opposite directions, right? How is that even possible? So it's very, very, very important that in the family that you should work as a team. So I can't stress this more. Circumstances today have reinforced that need, but even otherwise, we've been saying this, that in your family, the work has to work as a team. So here I just want to share a few tips that you can use, a few ways in which you can break this conversation, have this conversation, right? So 5 ways you can get your partner on board to follow the financial plan. Yes, wills should be made. We'll cover wills in another session, of course. Ways you can get your partner on board to follow the financial plan. Just a few tips, guys. This is just work for me, work for a few of my clients. If you have better ideas, please share, right? Okay, so this is where it is. Yeah, so set goals for life together. Talk about the future. Visualize and share how the partner appears in your vision of your future life. Dreaming of life together is the starting point of planning for a life together. So dreaming of life together. So we've been talking about this during February. We'll say, okay, now having a financial plan or working on a financial plan is the most romantic thing to do, because you are dreaming of a future together. What can be more invigorating? What can make that bond stronger than dreaming of a life together? And once you have that dream in front of you, and then you're like, okay, now if we have to make this dream a reality, how should we manage our finances? That could be a great opening line. Okay. Just a suggestion, take this as you go by. Another common thing, I've seen this with youngsters also, instead of splitting the expenses, you can pool your incomes. Okay, that's a much sensible thing to do. A marriage is all about you bring a bit of you, I bring a bit of myself, and create something together. So follow that with your money as well. Instead of splitting expenses, you can pool your incomes and then have common expenses, have common investment goals, um, you know, have common whatever fun goals. So all of your goals, if you will have some money for yourself, for your parents if necessary, but otherwise, if you are in a relationship together, it's a great idea. Or eventually with time, it just becomes convenient for you to, instead of splitting the expenses, doing this percentage split, 50%, 40% split. What if somebody's earning a lot more than the other person? So all those confusions will come. You'll say, okay, 65.32% you handle, rest I will handle. Gets a little difficult. So instead of splitting expenses, pooling the incomes could be something that you could do. Jointly hold all investments and nominate each other. Just to make that signature on that paper, they'll come out, do that signature, and then you could have this conversation. Do you know what this is? This is what I'm doing. This is an investment. This is an insurance. So this is the document. So it could just open that conversation for you. So it doesn't matter if one of you is contributing to building the assets financially and the other is not. One of you is able to contribute completely because the other makes it possible for you to do so. Acknowledge it. When you create something together, own it together. So jointly hold all investments and nominate each other. Borrow with each other as co-borrowers. I know. So you bow through good times and bad, ink it on all the papers. Borrowing together ensures you're thinking through your borrowing decisions. This is more important than anything else. You're thinking through, if I'm taking a loan, I'm thinking through it. And it'll be very sensible for you to have an alternate point of view at that time. Do we have to really borrow for this? Can we do it in some other way? So you're likely to end up with more good times than bad ones, right? And the last one is, please stay far, far away from committing financial infidelity. Infidelity of any type is not good for a marriage. We all know that. But financial infidelity is where your spouse does not know a financial decision that you made. You did it yourself. You made a decision to just give your money to your friend, or you just made some, you did some speculative stuff. You did some F&O trades and you didn't tell your spouse about it. So it not just spoils your financial situation, it spoils many more things. So stay far, far away from committing financial infidelity. A few things that I thought from my personal experience and from the experience of my clients, I thought these are ways in which families can come together and think of a future together, put their finances together and work on it, right? So this is just something that I want to share after a very, very heavy tax session. I thought this would make sense to you. Doesn't make sense to you? Do you have any more suggestions to add on how a family can come together and do their financial plan? Anything from your personal experiences, please do share on the chat box. Is there any personal experience? This is making sense? This is making sense? Is this making sense? Or did I lose all of you here? 5 points are income tax refund for us to enjoy. Okay. Income tax. Okay. Okay. Yes, that makes sense. Okay. So it was informative. Great. Awesome. So if you can take this message out and share it with other people so that we don't have these 12,000, 15,000, 20,000, 30,000 crores lying unclaimed. It has to go to the people who deserve it. Open talk, no hiding of spending investment. Yes. Please don't hide anything from your partners. This is what we wanted to share with all of you. Right. So when partners work together, the family is likely to pay off loans faster, they prepare for children better, and become financially free and wealthy much earlier. Seen this with clients wherever families work together, they get there much, much faster. So you want to get there faster, this is something that you have to work on right away. Okay. Okay, guys, to the last section of today's meeting. Thank you very much for turning up and for being that awesome community that you are. And it's been 6 months. When we started in November, I had no clue. Uh, like how Amit was telling last time that I was shooting in the dark. I'm still shooting in the dark. But one thing that we've resolved, we even connected amongst financial advisors in the group to say this: we want to take this to the next level. I think we have to have more serious, sessions. While this is free, people come. Sometimes they come, sometimes they don't come. They learn. They take it away. They have good words to say. I'm sure it's being of value to a lot of you who attend these sessions. I have no doubts about that. But I think it's time for us to get a little more serious. A little more serious, meaning more focused on actions and results, right? Not just knowledge dissemination and you take what you want to take and do what you want to do. That's one way of doing it. That's fine, no problem. There's enough material out there. There's Google out there. There are enough forums that are giving you stock tips and investment options and all of that, which happens on our WhatsApp group. There's a lot of conversation happening. I have no problems with it. They're all amazing. Knowledge sharing is great. It opens our mind to new options, which is great. But if you have to take this a little more serious and actually see if this is giving you any results, are you actually making that progress towards the 10 crores? What are small actions that you can take? What has been your success? What have been your challenges? If there is a specific challenge, are you getting that extra help needed to help you through it? Right. So that's where the thought process is going on. How can we take this to the next level? So to me, it's you know this, right? So we've been here together. I've had people come for almost all the sessions and sharing very openly their thoughts and ideas, and I just thought it'd be sensible for us to put it out to all of you on what thoughts we have at this point in time. Take your feedback and start a premium membership sometime in later this year. So giving an opportunity for members here to graduate to a more serious community, while the free community will continue, a little more serious community which is focused on actions and results, right? So let me just answer these questions here. I took an LTA tax exempt by producing two-wheeler purchase bill to my employee. Yes, okay. So that was also provided last year. Sorry, I'm getting distracted, guys, but some points that have come in this. Okay, some communication that's happening between people in that chat box. So let it be. So here is what I want to be sharing with you. In the last 6-7 years, those of you who've been around, do you want to share with us what kind of takeaways has it been for you? We've been doing a few things, right? We've been doing all of this in the last year. So we have discussion forums where we share, we raise questions, we bounce off ideas, we celebrate successes in the WhatsApp group. We attend the free webinar every month. Then we have access to view previous sessions. Okay, now don't hold me to this. These previous sessions, I have to put out a website and then post those links there. Otherwise, it'll just get lost in various places. Then the idea of putting out a monthly newsletter is in the plan to attend guest sessions, special events. Yeah, so the free membership benefit that we're talking about is that we can continue to get access to all of this. So pay and attend some guest sessions. Of course, when we call in guests, we can't always expect them to come and do a session for us for free. Of course, we had Zenobia come, we had Kanap come, and Amit come. There are awesome people, right? There are people from the industry. Today's session, I wanted to bring in somebody from the crypto space, right? So it's not that they're going to come and do sessions for free, but it'd be very useful for us to have them over and have these conversations, which means we have to have some kind of a kitty to pay them, right? So some special events that we can do. At some point, we should be able to do an annual conference and have speakers so that we can meet and greet each other and meet in person, right? So these are some things that we are, we think we will continue at the free membership benefits. And of course, the premium membership benefits, we're thinking we'll provide full access to view all previous 10 CL sessions. And we're putting together an online course because we've already covered. So we've had people come and ask us, right, saying, can I see the previous sessions? So Amit Patel was asking, can I see the previous sessions? I've missed the first 4 months. So we thought we'd concise it, how will you really watch like 90 minute sessions? I mean, I don't know it. I thought we'd maybe make a more sensible online course on the how-to of the 9 steps. So the 9 step process, of course, we know what are the 9 steps, but how-to of the 9 steps. How do I build that? How do I do my budgeting? How do I? What kind of tips do I have? What challenges will come along the way? So give an online course and access for the 9 step process, and have smaller groups. So we are amongst us a lot of financial advisors, well-meaning people who have the same value systems. We share a similar space. We want to be doing this for people and have exclusive coaching sessions in smaller groups, which is very specifically focused on actions and results, where you say, okay, I'm actually tracking your net worth and seeing if you're making progress on your net worth. Right. So have smaller groups with exclusive coaching sessions, have buddy systems for accountability, give access to tools and trackers that we can go on to build, which are exclusive for us, give free access to guest sessions and offline events, and maybe get sponsorships for annual conference and do all of that. So these are all in the mind. Okay, this is all. Sendal says that to explain. This is all in the mind. These are all ideas that we are bouncing off, and I mean we're thinking of and we're bouncing off. We're not ready for all of this now. We want to be launching by September, maybe Ganpati. So that's the thought process in the mind. What I only want from you is I want a little feedback. So I just put out a little feedback form if it's okay with all of you. Can you give me a feedback on this particular link? Just sharing this with you. It's a Google Forms. Okay, there's a little link out there. If you can access it, I'll share it in the group as well. So give us some feedback on to tell us so that we can sharpen what we are offering. We can make it a little more relevant, so we know what's working for you, what's not working for you, what you'd like, for us to do better, and and then come back and say, okay, this is what it takes to be able to offer this, and so this would probably be a fair price to charge, or something like that. So this is the space that I was coming from, and I wanted to bounce it off with you. The 10 crore league has come some distance in 6 months. I'm very happy and proud, to have been part of your journey. But I think it's time to take it to the next level. Does this make sense to you? Does this make sense to you? Can you give me a quick feedback on that forms? Yeah. Okay. So this is what is my request to all of you guys. If we are in it together, you've been part. I mean, tomorrow if this becomes a huge community, 1 lakh member, 2 lakh member community, and we can actually do something sensible, like in a crisis like this, we pool in money, do something useful, or we get maybe insurance for everybody in the group, or we get some exclusively made products for us. Who knows, right? So, and you guys are the initial first people. So if we have interest if we have at least some 25-30 people showing interest in graduating to an upgraded version, we will have the resources. I mean, to me, this is something that I have to do. It's just occurring to me that we have to do it, but it costs a little money. So it makes sense for us to pool in some resources and build something that's a lot more useful for all of us, based on demand. Yes. So that's all. Those are things that are in our mind. So please give your feedback, and over the next 1 or 2 months, we'll come back with a more concrete plan. We'll push it through you, and we'll see how the interest is, and then we'll see what we can do. Have some early bird offers for all of us here, and take the message out to the rest of the world. What do you think? Thank you, Pooja. Please give your feedback on that link that I shared. I'm sharing that link one more time, guys. Please take a minute. This is very, 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 very necessary for us. We put a lot of efforts behind these sessions, and in the WhatsApp group, there are so many financial advisors here who respond to the queries that come in the group, and who doing their bit to it. So it's very important for all of us here in the core group also to understand what's working for you, what's not working for you, and so that we can make it much more sensible. And then you please encourage your friends, your your contacts peer to come be part of this community, so we can have you can have buddies, right? Yeah, make it more effective. Yes, Harsh, counting on all of you to take this to the next level. So that's it. It's 5 o'clock. Whatever we're covering, we finish it on time. So thank you very much for turning up for the session today. Please do your bit. Stay alert, stay safe. Watch IPL, eat mangoes, have fun, and give feedback. I'll share the link again in the group as well. And thank you so much for coming. If you want any last words, any quick takeaways, you want to share it on the chat. I'm just around for 2-3 minutes. And you can say, you can switch on your videos if you want and say bye. It will be nice to see your faces. We've been, I don't know, I haven't seen my sister, my nephew in so many days. Thank you.
Thank you, Bhuna.
Thank you, JJ. Thank you very much. Thank you everyone for being awesome. Take care. Bye-bye.
Thank you, Bhuna.
Thank you.
Thank you. Wonderful session.
Thank you, G. Thank you very much. Thanks so much. Seeing all of you.